specialize in helping international clients to navigate their business interests in Turkey through advising in corporate business employment law. Thinking about living, working, or doing business in Turkey? From local entrepreneur to a foreign investor, understanding the general taxation system in Turkey is very crucial to stay compliant with the law. I am here to help you to understand the general taxation system in Turkey, and let's proceed. Turkey operates under a centralized tax system governed by revenue administration, and there are basically three categories of tax in Turkey: expenditure tax, income tax, and wealth tax. Income tax are collected from individuals and businesses, while expenditure tax are like VAT and special consumption tax. As a wealth tax, we can give an example of property, inheritance, and gift taxes. If you are individual earning income in Turkey, these are the things that you should know. First of all, Turkish taxation is progressive, which is ranging from 15% to 40%. Residents are taxed from their income worldwide, while non-residents are taxed from only their Turkey-sourced income. Taxable incomes are including wages, capital gains, and rental incomes. Tax returns for individuals must be due by the 31st of March every year. For companies operating in Turkey, the corporate tax is 25% in 2025. But you should note that if the company is a Turkey resident, they will be taxed from their worldwide income. Value-added tax is applied most of the goods and services in Turkey. In 2025, the general VAT rate is 20%. However, this rate is changing according to the sum of the goods which can be sourced as an essential, and it is ranging from 1% to 10% for essential goods. VAT is filed monthly, and input VAT can be deducted from the output VAT, which means that if you have a company, you can deduct the VAT of your expenses from the VAT of the invoices that you make. Other common taxes include stamp tax, property tax, and special consumption tax, which is taken from the alcohol, tobacco, and luxury goods. Let's talk about tax incentives in Turkey. Major opportunities for the businesses to save money. Tax incentives are supported by the state, mainly in special zones in Turkey. Major special zones are technology development zones and free economic zones. Let's talk about free economic zones first. 100% exemption on income tax for the exported goods on free economic zones. And also there is no VAT and custom duty on the exported and imported goods. There are also real estate and stamp duty tax exemptions in free economic zones. If you are developing technology or making a research and development, establishing your company in a technology development zone in Turkey can make sense as well. You will be exempt from corporate tax from the incomes that you make from research and development and software profits. And you can also be exempt from the income taxes that you will pay for the research and development stuff. There will be no VAT and custom duty also. Tax compliance in Turkey doesn't need to be overwhelming if you are working with the right team. If you want to establish your company in the tax incentive zones and you want to establish a tax strategy in Turkey, we are ready to help. If you found this video helpful, like our video, subscribe to our channel, and feel free to reach out to us.